It's going to be a busy week on Capitol Hill as the Congress approaches a 2-week recess. Both chambers are going to be considering budget resolutions, and they each have a different process when they do this. The House will consider the main resolution that's come out of the Budget Committee and several alternative substitute budgets. The Senate will consider amendments to the Senate Budget Committee's resolution and engage in what is known as vote-a-rama, where senators can request votes on any number of non-binding amendments, and they'll conduct a series of votes on Thursday, 40 or 50 votes all day long. It's quite the opposite of what we're used to when we think about the United States Senate. But that's just part of what we're following on Capitol Hill this week. We have a number of committee meetings and hearings, important markups in the House Energy and Commerce Committee and the House Financial Services Committee, and a patent reform hearing in the House Judiciary Committee. There's also going to be a hearing on small business capital formation in the Senate Banking Committee that we're following. One of the things we're paying particularly close attention to this week is the markup that's going to take place in the House Energy and Commerce Committee on the Data Security and Breach Notification Act of 2015. This is a pretty interesting piece of legislation because it's the first bill that we've seen in a while that covers not only data breach notification requirements and sets a national standard for notification, but it also purports to set a data security requirement on entities that aren't subject to the Gramm-Leach-Bliley Act. The problem with the legislation is that the security requirements aren't specified in the law. There's not clear rulemaking direction given to the Federal Trade Commission, and we have some concerns with the scope of the exemption that the legislation provides to Gramm-Leach-Bliley covered entities like credit unions. For example, in the draft of the legislation that the committee is going to consider, it would exempt federally chartered credit unions, but not state chartered credit unions. We've been working with the committee to try to get that addressed. We're hopeful that it will be addressed, but that's just one of several concerns that we have with the bill. Last week, the House Financial Services Committee held a hearing on regulatory burden facing credit unions and small banks. Patrick Miller, the president and CEO of CBC Federal Credit Union in Oxnard, California, testified at that hearing on behalf of CUNA. We presented more than 24 proposals for regulatory relief for credit unions. There were a number of noteworthy things that took place at the hearing. Let me just highlight 4. It started when Chairman Hensterling opened the committee, and one of the first things that he said was that it was his intention to consider bipartisan regulatory relief legislation targeted at credit unions and small banks, and that if members of the committee brought him bills that were bipartisan, that he would make sure the committee considered them. That's a very positive step and an indication of the priority that the committee places on this issue. The second thing that was notable at the hearing, Ranking Member Maxine Waters reiterated her support for increasing the credit union member business lending cap. And she really went to great lengths to explain her support for the legislation and encourage the committee to consider it. Representative Ed Royce, who sponsors the member business lending bill, announced that he was going to introduce a second bill on business lending. This one would exempt 1 to 4 family non-owner occupied residential loans from the member business lending cap. And it would provide significant relief for many credit unions that are facing cap restrictions. We're very supportive of that legislation, and it's sponsored by Jared Huffman, a Democrat from California. The fourth thing was an exchange that Representative Denny Hecht had with the witnesses at the hearing, both the credit union witnesses and the small bank witnesses. And the exchange was on data security. And Representative Hecht, during that exchange, was really trying to dig down into how breaches like those that happened at Target or Home Depot affect credit unions and small banks. And it was really the first time in recent memory that there's been that type of exchange on data security in the Financial Services Committee. And I think it was really helpful to the members to help them better understand the implications of that issue on the entities that rely on them for legislation in that area. Following up on last week's hearing, the Financial Services Committee is going to mark up nearly a dozen pieces of legislation this week, including several bills that credit unions support. The first bill on the schedule is legislation that would permit privately insured credit unions to join the Federal Home Loan Bank system. This legislation has passed the House on multiple occasions over the last several Congresses. We're excited that it's the first bill the committee is going to consider this year. We look forward to it passing the committee and getting onto the floor in April. The committee is also going to consider legislation that would eliminate the requirement that credit unions send annual privacy notifications to their members unless they've changed the privacy policy. And this is also a bill that's passed the House before, and in the last session it died in the Senate because one senator opposed it. We're hopeful to get it through the House again and get it in the mix when the Senate begins considering regulatory relief legislation. The committee is also going to consider several bills related to the Consumer Financial Protection Bureau's advisory councils. One piece of legislation would codify the Credit Union Advisory Council and several other similar councils that the CFPB's created, not because they were required to under law, but because they sought the feedback from stakeholders. We're really supportive of codifying those councils, particularly the credit union one. There's another piece of legislation that would require the CFPB to operate those councils under the Federal Advisory Commission Act. And this legislation is aimed at bringing more transparency to the process. The committee is also going to consider legislation related to the treatment of mortgage servicing assets under capital requirements. They will call on the FDIC, the OCC, the Fed, and NCUA to jointly study capital requirements for mortgage servicing assets, and they're going to put a stop on regulatory changes affecting the capital treatment of mortgage servicing assets until 3 months after that study is completed. We're supportive of this. Obviously, this is one component of NCUA's risk-based capital rule, and the banks deal with this issue as part of the Basel requirements. We think that this is an area where Congress should put the brakes on for the regulators. Let's study the issue and then move forward after the agencies have worked together and studied it. The committee is also going to consider legislation to provide small financial institutions some relief under the Real Estate Settlement Procedures Act. Specifically, they'll consider a bill that will exempt banks and credit unions under $10 billion in assets from the escrow requirements, and also exempt mortgage servicers that service fewer than 20,000 mortgages annually from certain RESPA disclosure requirements, and we're supportive of that legislation. Finally, the committee is going to consider legislation called the Mortgage Choice Act that would exclude from the calculation of points and fees taxes, insurance, and fees paid to affiliated companies like affiliated land title companies. We've been supportive of this bill for several years. It's passed the House before. We're looking forward to getting it through again and into the mix when the Senate considers regulatory relief legislation later this year. Assuming the outcome of Wednesday's markup is what we expect it will be and that all the bills are reported favorably to the House, we think there's a good chance that the House of Representatives will dedicate at least part of a week in April to considering these measures either individually or in groups. That's a positive step. Getting these bills out of the House in April gives us a great chance to move them through the Senate before the end of the Congress. We're also keeping a close eye on the Senate Banking Committee. There's been reports that the Banking Committee may consider regulatory relief legislation in April as well. And again, the extent to which we can get the House and the Senate kind of working on the same timeline really helps our efforts to get these first groups of bills across the finish line so we can work on even more regulatory relief going forward. We're also keeping an eye on cybersecurity and patent reform legislation. We think there's a chance that that type of legislation could come up in the House in April and perhaps in the Senate as well.